Lowcountry Money Talk, and we're on the back side of this break. In fact, we're on our last segment of this episode. Where we left you before the break was don't overexpose yourself.
Yeah.
I'd say that's good advice for anybody.
Market rash.
Market rash. Phil Bloyd's here with Revolutionary Financial Group, walking us through some pointers on, what all of this means for us, the market volatility, the, inflation, the negative GDP, but most importantly, what can you do about it? And some tips and pointers are what we're looking for. So first one, don't overexpose yourself. How does that relate to money?
Well, if I'm 80 or 75 and, I'm having some restless nights, the best thing we can do is make sure that we don't have too much exposure to the market. Yes. So we don't want to be overly invested, that's probably the biggest thing. So some people I've met, Jessa, they're like, I don't want anything in the market. Like we could call that underexposure.
Okay.
We get hypothermia on that one. I don't know. But then
you want the right amount of exposure.
Right.
Okay.
The right amount, the right mixture. So, if that stock market is only 30% of my overall asset class, or the risky part of the stock market, we'll say, if it drops, 50%, that's 15%. Bad enough, but still a smaller part of the overall picture.
Right.
So, some people are like, well, the S&P index is down 12 and I'm down 4. That's horrible. Well, if you feel that way, then probably you're suffering from overexposure.
Overexposure, wow. Okay.
And we got to get some allo analysis for you, right away to help you out.
Yes, okay,
So
I like that one.
Thing, right?
That's really good.
So,
all right, and now let's talk about some others as we roll through here.
Sure, act your age.
Act your age,
Yeah,
okay.
many people sit down across from me and they'll come in and I'm like, my gosh, you look a little aged for a 30-year-old. And they're like, what are you talking about? I'm like, you have the investment portfolio of a 30-year-old. So again, if I'm 75, I probably don't want 75% of my portfolio exposed to very risky assets.
This is a very interesting topic, actually, because you've heard about these things that can tell you what your real age is and things like that versus how long you've actually been on the planet. This is an important one too, though. Yeah. How old is your portfolio versus how old you are?
Right.
So you've got to have the right mix, the right portfolio for where you are in life.
Yeah, sure. And the problem with that is with this bull run that we've had over the last 13 years or so, many people have just, they haven't taken the gains and pulled back to a more moderate or safe side of things, and they've let that continue up, and they just, everything's lovely. Well, they missed out a big part of the, the investment side of things that says, hey, make sure you don't expose too much. So if we had this huge bull run over the last 13 years, but we lose it all back, but now we're retired, we've got big problems, And I'm overaged anyway, because they say if you're in the Marine Corps, for every year you serve, it's like 3 years.
Wow.
So I did 9. So I'm at least, how old did you say the fellow was?
I interviewed a 100-year-old recently. Oh, 118, speaking of age, is the oldest living person right now. So their portfolio needs to be...
Takes a lot of money to live to 118, I'm guessing.
It does. Okay, we have a few more to get to.
Sure.
I want to talk taxes. That's a big one.
Sure. Watch your taxes. So again, we want to protect our income. So let's go back a bit and say, if the market's down, we don't want to have to sell an asset that's in a decline to take income. So it's very important that we have another asset class that isn't in decline that we can take income from. So that would be important. The other thing we want to look at is if we can save money in taxes, if we can save money in expenses, then that's less income that we'll need out of our portfolio. So we need to clean this up just a little bit. And the good news is, Jessa, once we clean it up now and we get back into the next bull market, you'll be even better prepared for the future.
Right. Well, hey, that's good to know. That's just 3 pointers of a long list that you have. Sure. But that's a good place to leave it. You'll have to stick around for our next episode to talk more about what's happening. Phil, thanks so much.
All right, glad to be here.
Sure appreciate it. We appreciate you. We'll see you next time on Lowcountry Money Talk.